that in terms of timing, what's going on in the renewable space, that 2024 was going to be one of those pivotal years where those stocks were going to really pivot from lows and start to make multi-year moves towards the stratosphere. And so some of the stocks that we're looking at, I don't mind giving names, like Next Era and Constellation and First Solar
Mhm.
and others, have only begun to see the kind of returns that I think they're going to show over the course of the next 3 or 4 or 5 years.
Hi there, and welcome to Stock Club. I'm Mike, and joining me today is Dan Dicker. So, Dan Dicker is an energy markets and trading expert. He's got over 40 years of experience. He was a former trader on the New York Mercantile Exchange way back. He started in 1983, I think. So, he's got some great war stories. We talk about everything in the energy industry. We talk about oil, we talk about renewables, we even talk about nuclear, we talk about the effect of AI. This is a really good episode from a energy expert, and I think it's a really valuable chat. So here we go. This is Dan Dicker. Dan Dicker, it's a pleasure to have you on Stock Club today. For our listeners who, well, I've given you the bio for the intro, but for our listeners, could you give us yourself a bit more of your background and kind of what you're doing here today?
Well, I probably started in the commodity business in the oil pits when most of your listeners were probably children, probably maybe not even born in 1983, was the first year I stepped foot on the trading floor. So I've been at this for quite a long time. I've been a trader of oil futures since 1983, and I incorporated oil stocks using my knowledge of financial futures, which was a unique kind of way of approaching stocks, energy stocks, sometime around 2003 as the oil market started to accelerate to the upside. So I've been doing that for quite a long time too. And that became sort of a movement towards mass media, where I worked as a contributor for CNBC for about 8 years, paid contributor. Moved over to Bloomberg, where I worked for about 3.5 years. And then everybody got cheap and didn't want to pay anybody. And then I started my own gig called The Energy Word. And quite frankly, this is something that I still do at this age. I'm 64. I'm pretty goddamn old. But the reason I do it is because I like it. I find the energy markets endlessly fascinating. I enjoy talking about them. I enjoy giving people my insights on them because it doesn't hurt me a bit. And I continue to trade the markets, from a medium to a long term standpoint every day still. Every day I'm engaged. So this is where I am right now. The energy word is what I do, and that's the access point for folks if they want to find me and get a part of that insight. It's goddamn cheap if you ask me, but I'll let them make their own judgment. For a guy who's been in the business for, like I say, since before they were probably in diapers, and I've been pretty successful at it. I won't tell any tales, but I live okay, and that's mostly because of what I learned on the floor and then translated further on outside the floor. So there you have it, Michael. There's it in a nutshell.
That's
How's that?
pretty good. All right, so you've got 40 years of experience there in the energy business trading. I want to
Give or take.
give or take. I want to kick off with a very broad question because the energy industry in particular is one retail investors would tend to ignore in some shape or form because it's a lot of tacit knowledge is needed there. So, what is one thing retail investors don't know about the energy market but should?
Well, it's impossible to ignore it from a practical standpoint. What they should know is that they couldn't look around a room and not see 98 or 99% of what is around them have some form of energy that went into the either the manufacture or actually the content of it. And that kind of dependency on energy in its forms is something that no investor should take for granted. Now, to be fair, since I came into the business in the 80s, the percentage of energy as a as a whole percentage of the GDP has probably gone down by half, somewhere between from 12% to about 7, something like that. So it's not nearly as critical an input into GDP as it used to be. However, looking around, it would be pretty foolish to not be at least aware of how critical energy is to everyone's lives. And therefore, some insight into that could be pretty critical to somebody's, investing ability in their investing chops. So that's how I kind of see it.
Absolutely. And we're talking about global economies and stuff. And this goes beyond just investing. But in terms of everything, making the world go round, we've seen even the EU get very exposed without being energy independent with the Russian embargo after the Ukraine invasion. It just, I guess it shows that, the US and China are the world's two biggest economies, and they're also two of the four biggest oil producing nations. That isn't by accident. And like, it really does just make the world turn.
Quite right. So that is, the starting point at which we start to look at this. Now, I would argue that the reason that the Chinese haven't overtaken the United States is still the number one economy in the world, is because of the ability of the U.S. to scale back and forth in terms of their own energy needs and their energy production. And they've done that, rather successfully, to the degree that they've, at this point, to a large degree, broken OPEC to a large degree in their ability to control and manage prices. As we've seen over the course of the last 2 years, mostly post pandemic, when they've really lost the thread of their ability to control prices. And we see actually today, I think oil was close to breaking $70 again, which, in a market where the world screams about, or at least in this current political environment, people scream to death about inflation, is insanely cheap, comparatively speaking, to where it was, pre-pandemic, and then obviously 10 years before that, and 10 years before that. So uh, again, the U.S. remains on top of the world, and I don't think to a small degree because of the scalability of oil and gas resources, and obviously their up and coming renewable resources as well, which will power the next 30 years of hopefully their preeminence.
Yeah, absolutely. And I want to touch on that now. So you've written a book called Turning Oil Green, and it's going into the long-term trends on renewable energy, the obstacle it faces. And like, I just want to hear from your opinion the difficulties of transitioning from oil to renewable energy, especially we'll say from a US base.
Well, from a U.S. point of view, it's very clear. It's mired in political problems. You know, both sides, whether you're on the right or you're on the left, both sides have absolutely the wrong approach towards energy production and use in this country. The right thinks that opening well spigots endlessly will solve every problem, when in fact, even oil companies would rather that that didn't happen. It does nothing but destroy energy markets and energy companies in the process. Whereas the left would like to shut down every well and see that get destroyed, which again would take away the unbelievable economic impetus from a U.S. economy that still leads the world in its ability to perform, and has proven that through the pandemic and onward. So, from both standpoints, their approach towards energy is wrong. Part of what I do in the last book that I wrote is called a both out. Of course, that didn't make for great book sales because nobody likes being yelled at, especially when you're yelling at both sides at the same
You're
time.
not making
But that's the way
you're not
I
making
see it.
any friends.
Yeah, no, I did not make any friends with that last book. But it was that the last book that I wrote was one that I felt, I'm reaching a certain age and I've seen enough in this world, and I don't, I have enough money or whatever, to do what I want. And, I have 40 years of observations that I wanted to distill into a book and get out there. And if nobody reads it, that's their business. But, these are, that's the way I see it. The roadblocks come in the instantaneous attitudes that both political parties bring towards energy. The oil companies are an integral part of what makes this economy great, and you must incentivize them to move forward with transitioning towards renewables, which is a natural kind of construct. It's something that the energy markets have done for centuries. We came from a place where we burned manure. We went to wood. We found that coal was a useful product to burn. We went through oil and natural gas, and this transition away from manure and wood came only after we had redeveloped the infrastructure required for oil and natural gas. And coal has only begun to sink now because we're only starting to begin to establish and expand the infrastructure for renewables. And all of this is a natural progression that needs to be followed and needs to be augmented. And the easiest way to augment that, the only way to augment that, is to recognize that those who have the energy, control the energy, can move the energy, can deliver the energy, cannot be left out of the process of transitioning to that energy. And that's been the way that I've kind of approached it and kind of spoken about it. The oil companies need to be incentivized to be part of the process and not, uh, isolated, which in many ways is what the left is trying to do. Neither do they need to be pandered to. They still get about $5 billion a year in subsidies, which they haven't needed since about 1997. These are subsidies that help drilling costs for places where the oil companies probably should not be incentivized to drill. They have a huge number of working rigs in service already with viable oil production, new technologies and new techniques. What they're doing in the Gulf of Mexico with deep water is astounding. And these kinds of incentives for new projects, it's done. It's finished. They don't need it. They're not going to go to Congress and tell you, okay, stop giving us free money. But that's another thing that the right has been, obviously they wouldn't let anybody touch these kinds of incentivizations for oil companies that the left would love to see gone, and so would I. It's a waste of dough. So again, my last book was just a pile of this kind of stuff. The kind of mistakes being made by both sides that are not really pushing the ball forward, and collectively, it has made for a very, very slow transition. When, quite frankly, based on what we see, especially during hurricane season, for example, the last two major shots we got with Helene and Milton, our time is kind of running out here to get a handle on climate change and fossil fuel emissions. So that's really where this
Yeah.
is right now.
Yeah. So let's talk renewables then. So Larry Fink has come out and said that's where all the next spate of unicorns is going to come from. Bill Gates said it's going to be where the next $1 trillion companies are going to come from as well. Would you tend to agree? This climate tech area is the next.
I mean, I've been on top of this for 8 9 years. Of course, timing is what a trader does. Finding long-term trends is what Larry Fink does, or claims to do. I mean, the last time he jumped into ESG, which was 6 years ago, he got his hat handed to him. He got his shirt taken from him because he was early to the game, and he invested big. And the pandemic came, and interest rates went up, and it decimated every investment he made. Billions and billions and billions of dollars of losses, and was forced to rethink his ESG policy. Now, of course, he's back. I mean, the trend is clear. It's the timing that counts,
Mm,
right? And in a lot of ways, that's what I do. big hedge fund guys, they suss out the next great trend. And God love them for that. And I rely on other people to give me a hand in doing those things. But once those trends are found and they're that obvious, which this one clearly is, it's all about timing. And to put a plug in for my service, I mean that's what I do. I find stocks that are ready to have been beat up for whatever reason. Well, in the last cycle, it was because of the Fed's kind of crazy increases in interest rates, and um, I try to find them and position my subscribers. I have no clients. My subscribers in them at good value, and then we sit there and we ride, and that's what we've been doing with a couple of stocks this year, and we've had a tremendous year. I kind of recognized that in terms of timing, what's going on in the renewable space, that 2024 was going to be one of those pivotal years where those stocks were going to really pivot from lows and start to make multi-year moves towards the stratosphere. And so some of the stocks that we're looking at, I don't mind giving names, like Next Era and Constellation and First Solar
Mhm.
and others, have only begun to see the kind of returns that I think they're going to show over the course of the next 3 or 4 or 5 years. But to get into it when it's early and get a nice base of quality, sort of that first basis price, as traders call it, that they kind of put down, that they kind of can position themselves around, is the golden zone. Once you have that first basis area of stock at a good level, that's when you can start to play and have some fun with the positions. And that's kind of what we've been doing for most of the year, because there's really not much more to say. The three word answer to the question that you started with, Michael, is Larry Fink is 100%
Yeah.
right.
Okay. Well, I think First Solar is a good example of a stock that's been caught up in the political cycle as well. So I think it was May of this year, the Biden administration brought in those 100%. Was it 100% customs import tax for Chinese solar panels? We saw that come in. The stock basically went up 50% in a week, and it's been kind of playing ever since in this limbo of we're going to do well if it's a Kamala Harris win in November, and if Donald Trump comes in and does what he says and brings back a lot of what the IRA Act has done in terms of tax breaks and everything for solar power, it would really draw back. Now, First Solar is an interesting example because First Solar has plants in Ohio, uh, Alabama, and is building one in Louisiana. Is that correct?
That is
Yes.
right. Yes.
So I don't think any Republican nominee is going to promise to take jobs away from those three red states. But for this, how do you see the election playing out? And is it always exaggerated kind of before the fact? Does that make sense?
In this particular case, I would say yes, and sometimes I would say no. But in this particular case, as as wildly different as the stances towards renewable energy is between Donald Trump and Kamala Harris, it's it's really, this is a trend that has started to, like the big choo choo train, started to charge forward, and I don't think it's going to make too much of a difference who's sitting in the White House. Now, I am not a big fan of tariffs as an economic device
No,
most of the
but
time.
in
But on
it
solar panels,
seems very
I
necessary in
mean,
this particular
they've
case.
they've played the Chinese have played so loose and unfairly and crap, with America in that particular case. I'm really behind it. I'm all for it. One of the few things that I think Trump did right was on some of these Chinese tariffs. Steel maybe less so, but on solar panels, he was 100% right. And when Biden brought that back, it was also a recognition that the Orange Man got a few things right, and that was one of them. And it has been a boon for First Solar. Again, if you look at the numbers of what's required here with solar panels in terms of installations to even make a dent, remember we're still down to renewable total, and that includes nuclear. It's 10% of what the United States does. Solar, I think it's two, one. I don't know. I'd have to look. It's not a lot. The numbers are going to increase astronomically. They must. They have to. And so the growth possibilities in places here with proper management of a government is just astronomical. That's why these are the kinds of stocks that are going to be volatile. They're going to be wild. But the first key was not Biden's reinstitution of tariffs. The first key, obviously, was the final the Fed finally doing what they had threatened for three-quarters of a year and actually cutting rates, which had obviously supports all of those commercial installations and installers who had been waiting for a better mortgage on new panel installations, had been waiting the entire year for something a little bit better that they had been promised and had continually been put off. And that is what I kind of centered on as being the first major incentive that the panel makers, U.S. panel makers like First Solar would see. And in fact, as soon as it became really clear that Powell wasn't kidding this time, that they were actually going to cut, that's when you kind of see the stock really kind of disappear from the kind of base it built and start to move higher. So yeah, that the big move up, that was a tariff deal, kind of slacked off from that, kind of sort of ate that, kind of um, found a way to digest that and come down a bit. And now it's kind of at a kind of a I wouldn't call it a value level, but it's a lot cheaper than it was, kind of thing. And it's like I say, these are stocks that are you're going to look at 3 years from now, and you're going to say I could have bought that stuff at 200. I can't believe it. Whereas you look at it now and you say 200, I could have bought that stuff at 50. And that's how this stuff kind of works,
Yeah.
right? I mean, you've been in the game long enough. You know how this stuff
I
works.
know about those regrets, anyways, that's for sure. Okay, then for the last question, then on solar, would First Solar be your favorite name in the space? I know it's the one that kind of.
It would be one of them without trying to give away the shop. I think that you'd have to, it would be worth your while to sign up and get the full range because, one name is not going to be enough to protect you. What you want a nice spread of, because I'll be honest, I mean, I have others that are a little more beta oriented that are crappy. They sit there and like they lie there like a lox and they don't do anything for months. And others that I had analyzed as being as valuable as the next one, and they're up 230% from where we bought them. So, there's certainly as a renewable name goes, it's about as blue chippy as it gets,
Okay.
which ain't saying much because they're all pretty. The volatility on these things, ain't for the faint of heart. They move, and they move big. But I guess if there's a name in the space that's about as blue chippy as it gets, yeah, that one's a good one. That one's a good one.
Okay, that's all I'm gonna get out of you, I feel, but I'll take it. All right, moving on then. We're talking about we have these net zero emission targets by 2050. One catalyst in all that is this proliferation of AI and the amount of power data centers are using. Like apparently ChatGPT uses the same electricity as 17,000 US households. You know, how do you see this playing out in the years to come? Will the energy needed to power this new technology lead to further innovation, or is it just going to be a huge setback in terms of these climate change goals that all these economies have?
Oh no, I think that these the companies that are going to have these appetites are so ESG focused. They don't want to run this stuff with coal. They won't. If they have to, they have the money and the resources to build the infrastructure themselves, and they will. I mean, look at the deal that Microsoft just did with Constellation. Now, it's a deal that focuses on their nuclear assets. But make no mistake, they went specifically to Constellation because Constellation's growth area isn't 3 Mile Island in Pennsylvania. It's all the renewable infrastructure that they've built out, that has been up till now the smaller part, obviously, of their utility, but is fast becoming and will become the focus of what they're doing and why they're doing it. I mean, that is the essence of that deal. That is a company that wanted to buy in and lock in long term BTUs, mega BTUs for themselves, that were secured and solid and unassailable from either a governmental point of view or a production point of view. I do not see on the horizon an energy shortage reappearing to the degree that it has reappeared itself several times in the past. And one of the reasons for that is because renewable is endlessly scalable. And it requires all anything requires, but it's particularly what renewable requires is money and will. And AI will drive that will and has the money. Um, I think that AI, and particularly the power centers for AI, are a major factor in the growth of some of these stocks that we're staring at right now, and why I say that this is why I agree with Fink. This is a multi-year boom that's really in its infancy, really just starting, really needs to be jumped on. There was a I don't know 6 years ago, 6 or 7 years ago, I said the Europeans are going to have a problem at some point with natural gas. I don't know when, but they're going to have some problem. They have no resources of their own, and the U.S. is making these small little kind of movements towards LNG, and it's nothing right now. But I told all my subscribers, I said, this Cheniere in the corner, they're one crappy plant in Louisiana. Yeah, buy 2,000 shares, stick it in a sock drawer, and forget about it. It was $22 then. It's 175 or 180 now. Those are the kinds of things where you can see there's going to be an energy trend that's sort of inevitable. You don't know when, you don't know how, and if you can at least find prices on stocks that look like they can't go that much lower, so your risk is somewhat limited. I mean, those are the prime moments. Those are the moments, I've been doing this 40 some odd years. When I could buy refineries at $6, which I did several times, that to me was, just a gift, and not a hard gift, an easy gift. What? They were going to stop using gasoline? Wasn't coming back? No one was going to fill a car again? They're having a bad time right now. It was going to be bad for a while. And then people are going to need gasoline again. They're going to need refineries to make it into gas. I mean, these are the kinds of gifts that kind of find themselves, and they don't require a lot of looking, but they do require a little bit of experience in having seen it before, and an understanding, what has hurt some companies, what has helped others. I've never been a momentum player. I'm not the guy who's going to buy Bitcoin at 65,000 expecting 100. I'm not that guy. But I am the guy who's going to buy, a refinery at $6 that has come down from 30 because of the financial crisis, and load up and buy a boatload and stick it in the sock drawer and wait. I mean, that's just kind of what I do, and it requires some patience. But I deal with a special kind of investor. I don't deal with day traders. I've been a day trader. I know what it means to be a day trader. It's hard, and believe me, you need something besides just sitting behind a desk, being really diligent with what prints are going across the screen in order to make money as a day trader. Your edges will come from being, honestly, most of your edges will come from being a small retail trader as opposed to being an institutional trader. And again, I talk about that with my clients, with my subscribers all the
Oh,
time,
absolutely.
and
Something we say
also
as well.
in having the patience.
It's
What's
something we say
that?
at my Wall Street as well. There's so many advantages to, not having any quarterly reports, not having any expected demands. You can buy and hold. You can sit there for 10 years and not do
Not
anything with
having,
it.
how about having volume requirements?
Absolutely.
I got to push out 300,000 shares of this crap, next month, because whatever is coming due, and the liquidity is just not there to deal with it. If you're a retail guy and you've got 600 shares, which for you is a big position, hey, the market looks at you and they smile. Whatever you want. You're not gonna hurt a market. You're not gonna touch it. Just that ability to move into low liquidity markets, in and out of low liquidity markets. Commercial traders can't do that. Professional traders can't do that. Only small retail traders can do that. Can say, I'm willing to do these options here, and I'm only willing to do these there. And you put orders in. If they go off, great. If they don't, put them back in tomorrow. You'd be amazed how many times they go off. You're going to get off 10 options where that wouldn't make a dent. It wouldn't even start. The computers running at a family shop, much less a hedge fund guy. But for you, it could mean the world. It could mean a 12 or a $14,000 trade over a couple of months. You know, that's something a retail guy can do. That's not something that an institutional guy can do. So there's lots of again, I talk about this with my subscribers all the time. There are plenty of advantages to being a retail guy. One of the disadvantages of being a retail guy is trying to duke it out with the algorithmic people on a day-to-day basis. You're gonna die. I don't know when, but you're gonna die.
Yeah.
Now I can basically guarantee it. So don't do that
If
again. So I focused on much more mid and long term kind of opportunities, and that's kind of what I do. Boy, is that a long-winded answer to a
yeah,
question I
we,
didn't
we
even
meandered a
ask.
few ways down there, but it's basically a don't day trade. Don't day trade parable. Although, if you want to really learn not to day trade, you should read something along the lines of the book on Renaissance technology and Jim Simons or Ed Thorpe before him. The amount of work that goes involved into creating their 1% edge. And they've got 10 Nobel scientists, mathematicians behind the
Oh yeah,
scenes looking for that
I
1%.
was there at the start. I saw it. I saw it firsthand. I know the guys who did it. I know the guys who started up. I know the people they hired. I was there. I believe me. I know. I know who that you're competing
Yeah.
against. You do not want to
No,
compete
you
against those
don't. You
guys.
don't.
You lose. You lose.
Okay. Well, let's move on. You kind of touched on it there, and it's interesting. You were talking about Microsoft's deal with Constellation. Google, I think just yesterday announced that they were investing in their own. Um, they had a number of nuclear investments. So I'm always really curious about the nuclear industry in general because it is this kind of clean equivalent, but it's had such a awful past, the safety issues around it. Have you ever touched this area? Have you looked at stocks in this area? And do you actually think it's a viable option for a renewable future?
First of all, it's absolutely a viable option. I mean, the nuclear that we speak about today is night and day from the 3 Mile Island Chernobyl, kind of nightmare that most people think of when the word is spoken. Just, on another entire level. Now, do attitudes have to change for it to do better? For new units to be built? Particularly, those personalized units, which will power many of the larger office buildings and so forth and factories of the future, because they're common. But yeah, there's going to have to be a turnaround there. I think that will come. I'm always poking around looking for, again, a $6 stock, that's gotten hammered, that sooner or later is going to start to move in nuclear. And so far, I haven't really kind of touched on anything that I like. And I don't think the timing's quite right yet
Yeah.
either. I think a couple of things have to happen. But will it be a part of the future? 100%.
Yeah. One stock that looks like it's had a bit of a revival for the last 5 years, anyways, is Centrus Energy. Have you ever come across that?
Yes. Yeah, sure.
Yeah. Any thoughts?
Not really. Like I say, I kind of watch these things, not yet convinced, even despite the move. I'll miss the first, 100%. It's
Yeah.
okay. These are not stocks that are going to, stop at 100%.
No. Okay. So I thought we could finish up. We kind of do these traffic light games at Stock Club. I throw a stock at you. You kind of green is like a worth a look. Orange is a don't know it, not really passed. A red is a no go. You don't have to give too much away. I'm not asking for all your write ups in the energy word, but just a kind of an insight from someone who knows these stocks in and out. Does that sound good to you? I'll throw a name at you and you give
Sure.
me a traffic light.
Sure.
Okay. We'll start off with an easy one. America's largest oil company, ExxonMobil.
I'd say it's a yellow. Right now I would treat it like a bond. It ain't going much higher, it ain't going much lower, but it'll give you 4%. And if you can find a way to throw some options on top of it, you can probably get 12% out of it or 11%. That ain't bad for, number one oil company in the world. But it's more like a bond. I don't have a problem, putting a chunk of dough in there, because if it beats, it's sitting in the bank. But that's what it's like. It's more like that's how I view it. I view it more like a bond.
Okay, sounds good. We already mentioned this stock, but I would see it as, and you mentioned it as well, as the blue chip in the solar industry. First Solar.
Yeah, I don't think I'm giving anything away by saying I'm green light on First Solar these
Okay,
days.
sounds good. Next era. So US's biggest wind energy.
I'm also 100% green light on it again. I think the timing on this matters, but I mean, if you look at the last 4 months from next era, it's like I think it's going higher. It doesn't require a genius to read that chart. You know what I mean?
I think we're getting a similar one here as well with Constellation Energy.
Yeah. I mean, again, you're talking some of my real, some of the biggest winners that my guys have had in the last 6 months.
Yeah.
Constellation, to me, two analysts said it went too far too fast, and it dropped like I don't know how much it dropped. It dropped like, like 20 points, and I wanted to send out a note to my guys now, but that seemed a little bit too dramatic. But the bottom line is, whenever two analysts get down on the stock, it's probably time to buy some more.
Okay.
Probably.
Do you think a lot of that is powered by this AI wave and the demand for power coming from it?
Again, we could sit here for the next hour, and I could give you 30 reasons and why these are these are the these are kind of the place to be over the next couple of years. But AI is not certainly not the power centers are certainly not the smallest piece of it.
Okay. Interesting one here. Enphase Energy. So stock that did unbelievably well, and that kind of got destroyed by the interest rates, the Chinese flooding the market.
Yeah, it's not been top of pops. I think that in some ways the structure, the management structure, doesn't appeal to me as much as some others. So it hasn't been the best for me. So, but someone could make a case for it. It's not like I'm the only guy who knows what what's good and what's only sort of good. But I could see, end phase is one, again, another one I follow all the time. And I kind of look at it and go, I don't know. I don't know how else to describe the way I look at some of these stocks. Some of them are based on nothing but fundamentals and ROI and debt positioning and all sorts. And then others, I just kind of look at the chart and go, meh.
That's as good.
I don't know how to
That's as good
describe
as
that.
any.
That comes from 40 years, of doing this. Sometimes you just kind of look and you go, not yet.
Okay, sounds good. Brookfield Renewable, the Canadian conglomerate.
That one's new for me,
Brookfield
Brookfield.
Renewable. I think it's majority owned by Brookfield Asset Management.
I know them.
Yeah,
They're the real estate
yeah.
company.
Okay, we'll give that a yellow. Vestas Wind Systems. Do you know these guys?
Don't know that one.
Danish manufacturer, wind turbines.
What's the market cap on something like this?
Vestas is, I'm pretty sure Vestas is 134 Danish krona. So what's that? It's usually a tenth, about over 10 billion.
Okay, it's definitely big enough for me to take a look at.
Yeah, this is great. You're coming here, you're getting ideas. Brookfield Renewables is about 10 billion Canadian. So what's that? About 9 billion US?
Yeah, I have a problem with the Canadian stuff these days. Basically because of the infrastructure and government difficulties right now and getting stuff kind of going. Try something else. Maybe it'll hit.
Well, I said centrist. You kind of gave me a yellow traffic light on that.
Yeah.
Are there any other nuclear names you're more interested in than centrist?
Again, nuclear is not my forte. It's a couple of names that come through, and I'm looking at. Not going to give them away. Sorry,
No problem.
but you didn't mention them. And but again, I'm not quite there on a lot of these names.
Yeah.
I'm not quite there yet.
What about Occidental Petroleum? Warren Buffett's been buying it up like
I'm
hand over
I'm
fist.
I know it's done very very well, but I have a real love hate relationship with Holub. I think she's the worst CEO that the oil world has ever seen, male or female. Believe me, I'm crazy about ladies. She's awful. I think she's made a lot of carbon capture when it's a technique and not an end to a means. But she's basically structured the entirety of the future of Occidental based around it, and I think that she is in many ways benefiting from the Buffett magic right now. So, despite the fact that it's done very, very well, there's no denying how well the stock has done recently. I am not a fan.
Okay.
Red
Red
light.
light. The Warren Buffett investment is kind of like a self fulfilling prophecy, a small bit, because just people copy him and
And,
the stock
and
goes up.
quite frankly, the one guy who does by far the best when a stock that is as poorly run as Occidental by as poor a CEO as Vicky Holub does is Buffett. it is good to be king. If I didn't see the actual contract of what he wrote when he originally financed that deal with Anadarko for them and bailed her ass out. But let me tell you something. He got it all and another 6% just for a kicker. He got it all. And then throw in another 6%, Vicky, and I'll talk nice about you in a
Yeah.
year.
Have you ever had any dealings with Buffett in any way? No,
No, no, no, I never even met the
no,
man. But
he
he
wouldn't be
is
on the trading floor.
obviously a for a reason.
Okay, we'll finish off with the stock everybody knows. It's a bit of a cheat putting it into the energy category, but it does have a lot of battery plays, and that's Tesla.
I figured you might ask about Tesla, but I'm sorry, I do not go there. I think there's so much going on with a stock like Tesla. Quite frankly, for me, it's a red light.
Okay,
I think they're going to find just too much competition because obviously the appetite for you know those kinds of cars is only going to increase. And I'm not a without knowing anything about the company. And believe me, I am the wrong guy to ask about a stock like Tesla. I see a guy like Musk, and I know how much hype he kind of carries with his stuff. And I know enough about energy and the way that the infrastructure for EVs are expanding at this point that I wouldn't touch it with your 10-foot pole. But, what can I say? I could be so wrong about this because what I know about it is less than nothing.
okay, all right. Well, Dan, it's been an absolute pleasure having you on Stock Club. If you want to let people know where they can find you and talk a bit more about the energy word, now's the time.
Yes, dandicker.com, simple as that, DANDICKER.com. You will find the energy word. I should tell people that I am restructuring the service at this point into a one tier, one and done yearly $3.99 package, which will have a lot based on, first of all, I'll have the same kind of rolling portfolio that I've always provided my subscribers. But, in a lot of ways, I was doing stuff that was a lot more personalized, webinars, very structured kind of scheduled stuff. And I realized that most of the people who come to me, they just want to know what I'm doing and why and when I'm doing it. They don't need the filler. They don't need my analysis all that bad. They kind of believe that I know what I'm talking about at this point because I've proven it. Sort of. So just tell us what you're going to do, Dan, and leave the analysis, for some appearance somewhere else, like on a podcast with you or something. And so that's kind of how I'm kind of structuring the next one. That there's going to be fewer, less scheduled, less structured updates on what I see, what I'm personally doing. Like I say, I'm in the markets every day. I love it. And if I see something, I'm going to write something quick and I'm going to send it out. And if I see nothing, and if I see nothing for a week, I'm not going to write anything for a week. So it's going to be a little bit different than what I've been doing. But you're guaranteed to get, I think, a more intense, actionable, and perhaps useful kind of input into what you're doing in your portfolio. We're going to expand a little bit outside the energy kind of model and talk about some other stocks that I've added to my portfolio in general, for various reasons and why. And obviously, going to describe completely the strategies I use in terms of where to buy, where to get out, what kind of options to use if I think options are indicated, what kind of length, what kind of strikes, what kind of vols, all of that stuff. So I know that a lot of people, you know, are a little uncomfortable with some of the things that I suggest they do with their portfolios. But again, if you want to take advantage of what it is to be a retail trader as opposed to an institutional trader, you got to take advantage of some of these tricks. that only retail guys can do if you want to be consistently, a consistent winner. And isn't that what we're all trying to do? Trying to be consistent winners.
That's it. All right, Dan, it's been a pleasure to have you on, and thank you for coming on. Thank you, everyone else, for listening. And that's it. We'll talk to you next week.